And we are live. What's up, guys? Back with another evaluation, preparation, demonstration where we trade a demo account that we started with $50,000 and try to bring it up to $2,500 in profit before hitting $48,000 in drawdown. As you can see, we were in a drawdown for the first day. This is day 3. On day 2, we made a little progress, but we're still below the 50K drawdown. So let's see if we can turn that around today. A little bit late today on my start, on my end. It is 9:54. I should be getting started at 9:30. And that's not breaking one of my rules per se, because I have to trade from 9:30 to 12. So it's a window. It's not like I have to be here at 9:30. So we haven't breaking any rules yet. But I was late, and that is not a good thing. But I'm looking for the rules to show you guys. Where are my rules? Phone. Oh man, can't remember where I left them. Let's see. Here they are. Okay. So this rule, as I mentioned on the last stream, is going to change. Maximum drawdown of 350 per day. I made up my mind that that's what the rule is going to be, because we broke this rule, but I consider it, and it wasn't a good rule where I had some amount of profit per day and some amount of drawdown. The drawdown was really low. So we are switching that to a 350 drawdown maximum for the day. Doesn't mean I have to hit that in order for me to stop trading. The way I'll stop trading is when I see that the market has not been kind to me, or that I am in a very difficult environment. And right off the bat here on the 1-minute chart, we can already see that we are in an interesting area, mainly here, where we're tapping into this, I guess you could call it an imbalance. Not really, actually not really, but there must be some kind of hidden S&D zone here. And price has been trading away from that, never really breaking this high. He has run the high, but he has not completely breaking structure. We broke this high. And there's really no highs that we have to break here, except for this one, I guess. This high, although getting ran, has not been broken by a full candle structure. Or sorry, hasn't broken the structure. The structure is all the way up here. That if we go past that and break it, then that would be a break of structure. I noticed that on my last previous live streams, I have been using the term breaking structure willy-nilly, and a lot of times what I just mean to say is run of the high. So I'll try to do better at that in this stream, and following strings, future ones, not futures. But in any case, we are trading the NASDAQ futures contracts. We're trading one contract at a time, at least for now. On the actual evaluation, you can trade up to 5 contracts at a time, or 50 micros, 50 micros or 5 minis. I personally don't. I'm not good at yet at trading larger lots or contract sizes. So I'm not going to be messing with that yet. That's down the road once I become profitable. Then I can begin to set up a strategy where I take multiple contracts in one entry. But for now, we are taking it one contract at a time. At least for the earlier part of the preparation. This might have been a double tap and we're trading away from this area. If we look at the 5-minute chart, it'll become a little more apparent. Okay, so let's see. We got a high that's been ran, not broken yet, but we did create a high that broke the low that created that high. Well, I guess this is the low that created this high. This is the low that created this high. We could argue that this is the low that created this high, breaking this structure, this structure, this structure. And here I go again using that term again. So this is the validated low that we can now expect a range going, oh, the heck. Why am I pressing text? Shapes, there we go. So this is the range right now. Yeah, this is the range that we're working with. Price can do anything it wants in this area. So this is the high, trade down, tap, trade lower. But how much lower? Well, we cannot make predictions of breaking this low yet because it is validated when it created this high that broke some of the structures. Although if it did break this structure here, these highs, or ran the highs here, then we could be more certain that this is not going to get broken soon, because there might still be a chance that price maybe comes down here, trades higher, maybe here, trades lower, maybe here, and finally aims for these two highs. This one being the, of course, most wanted high that price wants to get to if it's trading higher, where we could see a big rejection from this area, maybe a scalp opportunity, unless or it could be the place where it trades lower from, but that's still early to decide. Now when we first logged in here or started this stream, then when this was happening, I said this is an interesting area, and I would have taken a scalp down had I been early. Had I been watching this, I would have definitely watched this, because this is an imbalance. There's nothing, there's no candles next to this wick. Big manipulation sign. Pride did trade low already with a scalp, then traded higher. So maybe this could have been a bigger move down to here, to at least run these highs. I mean, this low, sorry, to run these lows, but they've already been ran. So this is the next low to be ran. Got some imbalance here. Maybe, not really. This is a 5-minute chart, so maybe a little bit of a little imbalance right here. Right here. Very tiny area. So let's put a line there. Imbalances are white for the most part on my charts. So this is the range. This is the imbalance that we might tap into for a quick scalp up again. Price is not breaking this high yet. I mean, this low. I keep saying high, but it's low. Over here. Okay, well, let's go to the beginning of this move, I guess. We can start here. Ran the high, traded lower, tap into the same area, traded higher. S&D zone, where we actually just left from, as you can see. So something tells me that price is leaving because of this S&D zone. Now, of course, we want to look to the right to see what happened not so long ago. Very bullish bar here. So another S&D zone here. That price is right now being pulled up from, or pushed up from. So here, let's take a look at this area. The imbalance. This candle here is the lowest point in this whole thing before this low, which was the big break. You know, the big break of this high was caused by this low, but this is the low that we right now want to pay attention to if we're going to ascertain that price wants to trade lower. And again, looking kind of clear there what's going on the 5-minute chart. Let's go to the 3-minute chart. Yeah, also much more clearer picture of those, especially this is just the wick on the 5-minute. Here we have a bit of candle action, not so much imbalance. There is an imbalance from here to here, very small, but that could be a really good place to shoot up for a scalp. This might be a double bottom, a retest of the area before trading higher and breaking this high. We haven't ran the high though. We ran this high, but not this one yet. To the left, Again, we see this area here. Again, this is the 3-minute chart. I like to use it to give me an indication or indications between the 5-minute and the 1-minute chart. This wick, mitigating the imbalance here. Well, the imbalance was really from here to here, just a small imbalance, but then this candle took orders from there, from, you know, the upper part of the candle, traded lower, never really came back to that high there. So this, I think, is an important high that we gotta pay attention to. Gray is for important place. And yeah, we have not broken that. Well, let me see actually. Yeah, we have not broken that high. We ran it, but never broken. No candle has closed above that line. Okay, so we are getting a rejection more from this area. I thought price might want to come back here, but this could be actually the place where we leave from. This would have been a good scalp, especially considering this low here that created this high. And that's the low that broke structure, and we got a perfect place to leave from for a scalp. We didn't notice it. I'm not saying I noticed it, but now that it's happening, it's so much more clear. And yeah, this could be a nice scalp up. Maybe we get a second entry if it doesn't break through. Yeah, it could give us another entry here, scalp up, or maybe even push for a higher, maybe, you know, aim for this area here. A lot of price movement, a lot of volume, so price is very inclined, in my opinion, to search for this area again. Yeah, this price action seems pretty doable at the moment, because it's getting clean reactions from the areas of interest that we usually look for. The validated low being all the way down here. Well, yeah, actually down here. On the 3-minute chart, that's the validated low. No, that's not the validated low, because this low created this breaks of structure here. So actually this low here. So yeah, I was looking for a place to place a validated low. I think I found it here because of this candle breaking, or actually price did trade lower than this low, but only for a little bit. But this low was the one that broke these structures to the left, even this one, and even this one. So this is our protected low, if you will, so that we can trade in this range that we're on right now. Yeah, that would have been a great move if we had seen that, because it was a very clean tap and go, giving us a second entry here after we had seen this wick forming, close of the candle, a little bit of a wick. We don't know exactly how it played out. Maybe it went up a little bit and then down. But of course, eventually went up again. And we could have placed an entry somewhere around here for a scalp up here. And it would have given us a clean profit tap. I'm making up my own terms nowadays. Profit tap. That's when price taps our profit target and we make money. That's what it means. So I'm going to try my best not to get too focused on the lower time frame and too involved on the lower time frame and pay attention to the higher time frames. But for that, I have a separate monitor for monitoring the 5-minute chart. It's interesting to me how we're still pushing higher, even though we've had some tough troughs here. Okay, let's look at the 10-minute actually for that. Did some work on the 10-minute earlier. So I had drawn this, all this stuff. I drew this before this happened. But as you can see, I drew my supply zone. Price tapped out of there because this was, when was this? 2/23. The 23rd was what? Friday or? Yeah, that was Friday. So maybe I drew it on Friday. So maybe can't remember us being here when I drew this. But in any case, we were either going up, coming down, because that's Friday. Oh, it's in the AM. Wait. Yeah, it is Friday. So I might have drew this over here because we're on the 10 minutes, so it seems like there should be more candles, but because this is right now 26. This is yesterday. I think yeah. Okay. In any case, as you can see, my line that I drew here did bring out reactions. And why did I put that there? Let's see. I think the reason why I put it there goes back further to this. That's a fractal there. Is the last low, this candle's low before breaking structure here and going higher. Over here is the last high, as you can see. So also an interesting what's happening here for that line. Price bounce from there here. Maybe that's a big sign why I put it there, because he created a high, or he created a low, then tried to break structure, couldn't do it, and then that's where the break came. So as you can see, a lot of interesting stuff here. It's around that area that we usually get a tap when this happens, right? I mean, if this is a break of structure type of candle price movement, then price usually taps back to this area before trading higher. In this case, it didn't. Well, you could argue that it tapped again into this, but price did trade lower than that. Didn't break the low, but it did run it. Yeah, it did. It just ran it. So maybe that's not the best way to judge this. Maybe this is the first tap down, trading higher, second tap, and then leaving. But it did trade lower than the first tap, which I would have probably thought that price would come back one more time around here before trading higher. It didn't do that up until this point, and it did trade higher from there, as you can see. And then that's when it got ran later on. It tapped in there when after we traded below it, or we had traded below it before that, and then above it. So we traded below this line. Oh shoot, I just moved it. I think it was right here. It traded below this line. Well, first above, below, above, below, above, below, above. Stay there for a while. Once it traded below it, it tapped there. Actually kind of giving us here a double entry again. First tap, scalping move. Second tap, leave from the area. And then it really did a number on the bearish side. This is my demand zone. And of course, where we are right now. So again, I think we're more on the supply zone. So we might be going down from here once it taps back, unless we run this high again. Keep going further up. But for the moment, just from seeing what I just saw, all that movement and all the action that's going on in this area, I would assume a second tap, or at least a run, something happening here, whether it's a run through it or a tap, another tap to leave from there. We're gonna be watching this area closely. I don't know what I was doing there. So for today's trades, I am not sure exactly yet. I don't see any entry points at the moment. We're kind of in the middle of that range that I mentioned on the 1 minute chart. And we're going to the upside of the range, which ends here, maybe here. This is the upside of the range, and the downside is over here. Let's put two lines. Let's make two lines to create our support and demand. So this low here is the one that I believe to be validated. And then the top here, we haven't really reached any higher than this. So this is our range. It's pretty big right now, considering what's going on. I don't know. The volatility seems to be pretty low. Five. So 5 minutes. So for the past 5 minutes, 6.8 is the average volatility. 6.8 ticks, I believe. Ticks or points? That's something I'm gonna have to look it up. Seven. So let's see. 2 2.3. So 2.3 is 180.12. 18 what 18012, 1821. So that's nine points. 9 points in this little bar. Let's see. 1806, 1822. Yeah. So I guess this is points. I was thinking maybe it was ticks, but no, it's measured in points, I believe. So this candle is 6 points, 9 points, 6 points, 6.5. That's the volatility that we're getting for this specific candle. But I'm going to put it back on 5 so that 5 candles are averaged and we don't have a number that keeps moving up and down too quick. We do get a sense of what the next candle will probably be ranging in that volatility range. So we're heading down again after not breaking any or running any highs to the left. So this is the high that we haven't ran yet. So that's the next point of interest. And here we could see it as a, well, no, I don't think this area is fully mitigated. I think we're gonna go back there because we didn't run these highs here and because we didn't break these highs. And because of that, this could be a second tap in this area. We might go up from here. I gotta watch out because this next candle might give me an entry. Again, the manipulation that happened here, very similar candle, except this time it looks like it might close on the upside. It did. So that's a tough situation for us. We never got that second candle that gives us the entry, which could be happening right here actually. So we're still kind of interested in this area to go up for a scalp. Put our target over here, maybe over here. But we're hoping that price goes down again and gives us another entry up. We gotta see how it gets there, if it does get there, just like it did here. But this candle is actually this one in this scenario, because it's the one that brought us down, then closed, opened, and traded down. But then once it went up, it never went down again. So it never gave us a good entry. That was too quick of a move for us to decide to get in, because it very well could have traded lower, and it can pretty well trade lower than this line, but we have not seen any indication of that yet. There's more indication that it wants to go up again. Especially because all this area has been proven to be bullish in a very clear way. Second tap, first tap, scalp up, second tap, leave from the area. No breaks, but there were some breaks actually. I mean, we did break these highs here, but we didn't break the structure yet. So we ran the highs and we couldn't break this high here. We just ran it. And at the moment, it's looking like coming down to maybe give us another entry and go up. But it could also be the signs here that price wants to trade lower now. But again, we've not seen that. To me, this looks more like a double bottom. And especially because if this is the second tap of this, where we're going to trade lower from, which could be the case, I mean, but the reason why I'm more hesitant is because we have not really left abruptly from there, and every time price has gone down, well, actually this high hasn't been broken either. This right high hasn't been ran. So I don't know, I mean, this actually could go either way. I mean, not, of course it can go either way, it always can go either way. I'm just not sure which one I would put my money on. And sometimes I can at least make a decision. Okay, I think this way. Okay, I was wrong. Okay, I was right, whatever. But in this case, it did give us a second entry, usually at the half of the imbalance, but or half of that push up from the area that we are interested in. It pushed up, then we got half to that area, and then left higher. So that's our missed opportunity. We could have gotten in here, but we didn't because of this. Because we saw that when price traded here, went up, gave us another entry. A little bit of a S&D zone left here. But definitely imbalance here. Definitely imbalance, which was tapped into here. So again, I'm not really taking a decision here yet. But this could very well be, again, another bit of a high before finally breaking these lows. Especially because price hasn't traded higher. It's been making lower highs. Well, here it broke this, or at least ran it. So this high has been ran. And now we're trying to run this high. Let's see. And our range, as you can see, it's getting smaller, and it allows us to see where we could take a trade from. Hopefully sometime soon. 10:31, started late, so only been about 30 minutes trading, or maybe a little less or a little more. I hope the sound is good. Actually, I'm going to do a sound test. Right now that price is moving without us. I'm going to do a quick sound test. Okay, we're back. Looks like everything's going well. Okay, we're back. Looks like everything's going well. All right, so S&D zone created, bit of an imbalance. Going back to the imbalance could be a place from we get rejected again for a scalp. But we can't decide to take a trade, which I was about to do. I was about to say, okay, we're going down here, but it ran this high. So we're gonna see these next two candles, see if they break above this line. And of course, that could mean that we miss our entry, which already happens. It happens all the time. Trying to look for signs, and then once you see the signs, it's too late. Price has left without you. If you try to chase it and put an order, a lot of times you get a rejection right as you put your order. So we're not going to do that anymore. To me, that's wishful thinking. We'd rather get in on the areas that we really are interested in, so that we create a strategy behind that and not just start chasing price after it does what we think it's going to do. We got to catch it early. Ran this high, this low, sorry. Did it run it? Yeah. Well, tap into the exact same place. So we don't have a run of the low yet. That was our second entry. We missed it again. That would have been a good scalp. I figured we'd get a movement here, and that would give us a scalp down if the candle didn't close above this. But okay, yeah, this is actually good that I see this, because to me this is what I thought would happen, that we would trade back here again before breaking these lows here, or running these lows. Again, I keep saying breaking, and probably should be saying running. I say break of structure when I just should be saying run of the high. But bear with me, okay? We're trying to get better at this. We are rookies. Oh, by the way, I never did my financial advice disclaimer. I gotta do that every stream, just so I don't get in any trouble, because I'm not even making money on this. So, 1 second. How do I? All right, I'll do the disclaimer in a bit, I guess. We ain't got no time for that. Well, disclaimer. This is for entertainment purposes only. All the ideas expressed are solely those of the creator. The creator is not affiliated with any of the services or tools used in this presentation. This is just for entertainment purposes. This should not be taken as financial advice. If you want financial advice, go to your professional, dedicated professional, because investments and trading carry risk, and the creator is not responsible for any losses that arise from the ideas of this content or any of the content itself. Okay, so here we we did run it. That's what I thought would happen, that we would go up here again. And now we are making our way up. Now that this is happening, I have more of an inclination to believe that we are running these highs, potentially running this high here. And so we're not looking for a reversal just yet. However, this area might give us yet another tap, or this very well could be the second move down. But this double bottom is what makes me believe that we are going higher, because this is a very bullish indication, in my opinion, just the way this happened with the wicks manipulation and the imbalances left behind or down. Now we're trading higher. So, or we might just be ranging for a while. That might just be what's going on. We're in a place where price is undecided. Price has definitely traded lower and higher from this area. So this area tends to send price in both directions. This could be a really good move to the down. Take some profits. Let's see. Let's see if we get indication that we're going down after this. We did get some indication there that price didn't want to trade higher with the wick. We placed an order. We're shorting. We're gonna maybe place our stop loss at the break even if it gives us another chance. And the reason why is because if we break even, price could trade higher and then give us another entry. So we mitigate our risk and we are still in the trade. But first we gotta see price move in our direction at least more than 50% from the entry to the take profit. And I did lower my stop loss because it did run this high. And even though it's getting rejected, there's more indication that it wants to go up. And if it does break my stop loss, I don't believe my stop loss is going to be enough of a room there to trade lower from. So if it runs my stop loss, then it'll probably keep going higher. But again, we got another rejection. This might be a good place to put our stop loss on the break even. Come on, just give me a little more room. Yeah, that's 50% of the imbalance left, or the big candle left. So yeah, I'm definitely on a break even more idea. You see how it doesn't want to trade lower than that? Didn't run this low yet. Okay, it did run the low. Okay, there we go. Price is taking too long to get to my target. And we did close that entry. We took $75 in profit. Now we are only 65 bucks away, 64 and 8 cents. And yeah, it was, I mean, my stop loss I could have gotten double the point, $8 instead of 75, almost double. Yeah, I think my stop loss was around here. So maybe it would have been just shy from it. Nevertheless, a good entry. I am not upset that I moved my stop loss again, because if if I had gotten stopped, maybe price trades higher, and then I wait for another opportunity to go down and I don't lose my capital. Whereas if I just leave it open, let's say price does go up there, now I'm on a drawdown for the day and I still want to take a lower position, and I don't have that much capital to make more moves. So that was not a bad stop loss placement, I guess. Especially, like I said, like price did not really want to push lower here. I mean, had I seen a cleaner run of the lows, then I would have been more inclined to not move my stop loss. So again, we're getting another rejection, so we might take another entry. But because we didn't run this low, or even half of this big candle, we're not going to place an order yet. However, this is another good indication that this is going to happen again, and we might trade lower, maybe around here. But that's if we don't keep going higher, which might happen on these next 2-3 candles. Nevertheless, we're in a good area from where we can trade down from if we see signs of a reversal. There's an imbalance left here. We would call that an official break of structure, or the high, a break of the high, this one, because candle did close above it. So now no matter where this candle closes, we'll have a break of this high, and the next high or next area is this to be ran, and that could give us a very good entry as well. But if we get all the way up there, we're gonna have to wait to see if price wants to keep going higher even. And that makes this area very interesting here, because especially this candle, that's the low, the last low before the break of structure here to the downside. It's very close to the highs, especially if we consider this high as well. This low coincides with this high and this switch of structure to the downside. So that's where we are right now, or very close to that. So we can maybe take advantage of all this knowledge. So I guess I learned the disclaimer in my head. I read it once on stream, and I remember the gist of it. Basically, I'm not responsible because I'm not selling you anything, and I'm not even trading a real account. This is a demo account. And this is not real money. This is paper money, and we're just preparing for trade days 50K evaluation, which I'll be able to start trading on very soon. But at least I want to get 10 days of preparation trading before I start the evaluation. We're on day 3, and unfortunately tomorrow I cannot trade. I know, sucks. I have a thing that I agreed to do all day. So I'm not going to be trading at all, not even offline, or not live. No, I'm not going to be trading at all. And that sucks. That sucks. But I mean, I'll try to make the best of it, have fun with whatever I'm doing, and then get back to it on Wednesday for day 4. Thursday would be day 5. Then next week we get 4 more days. So basically I should be done with it. Let me check out the calendar. So today's the 26th. So I got 1, 2, so day 5, 6, 7. I mean, today's day 3, 4, 5, 6, 7, 8, 9, 10. So somewhere around the 12th of March is when I should be done with this evaluation preparation, if it all goes well. And then maybe March 13, which would be a Tuesday. Maybe then I can start. No, March 13 would be a Wednesday. No. Yes, a Wednesday, yes. The 12 is Tuesday, 13 Wednesday. And then maybe we can start our real 50K evaluation to see if we can get funded. And I'm not sure if I'm gonna be posting that online. I might just post it on the Patreon channel. We'll see. We'll see, because also trading and talking, it's much harder. And if I have something serious like an evaluation, I might not be able to do it if I want to pass to do online streaming. Okay, so we're on the area. This candle's telling us that price might want to push lower. We are making higher lows. So this could be a really good place to take a trade. But I'm waiting for an indication. Oh, by the way, I didn't record my trade here. It's 18.036, 18.039, 75, $75. Remaining balance is 49,935, 92. The time is 10:51. You see that? That's why. Okay, so I thought, okay, maybe go down from here, right? We finally ran the highs. We're in this area here that can also bring price down. Ran the highs there when I was thinking of shorting, and that's why I didn't short, because I didn't see any indication that price wanted to go lower. The problem is once you see the indication that price wants to go lower, it might be too late to take an entry. And so this becomes that area again that we were talking about. Now we are really running a lot of highs here. Ran. Not this one. Not this one. So very few highs that we haven't ran, especially if we consider them only the green candles. 1, 2, 3, 4, 5 highs left to break. And now we are getting a rejection from there, which we were expecting to happen. But hasn't ran any lows yet. No, not this one yet. Oh yeah, well, it did run this low. But I would actually argue this is the low that we need to run if we are talking bullish. Or sorry, bearish. We need to break these lows to talk bearish. Man, I'm getting confused with low and high all day today. But the low, this low is important. Broke this high. So this one first. Then this one. I like that one. Gives me a nice range to trade from. I have not had any coffee yet. That's why I'm kind of groggy and confusing my terms. Blame it on the lack of coffee. And you know what? I might take a break. That's a good thing about not having any viewers yet. I can just do whatever I want. I have no pressure of staying on. So I might put this thing on pause and go get some coffee, because I think it'll sharpen me up a little. And I'm really craving it. And this thing is in the top, which could be in a good area for us because we can take a long move down. Not that we're experienced traders yet to do well with that. But we're definitely not in the middle of a range. We're in the top of the range. And now we're getting indications. So let's see if we can break this low. When I first started trading, when we were in this type of situations and I'd see this low, I trade higher, or I'd place an order to trade high. And it gave me a lot of wins actually, you know, because it's kind of like if you just see this, right? You just see that you don't know anything about structure or nothing. You're just like out here gambling. And you see this and this. You see this and this. You see this and this. Then you see this, and you get in and you buy. And you take some profit and you're like, man, this trading thing is easy. But I didn't even know that we were running highs, that there was some kind of supply zone here. I didn't know that there was all these things that I now see. I didn't know any of those. And a lot of times I would win trades. And when I didn't, I couldn't even blame it myself, because I was like, well, I traded what I saw, but I didn't know what was going on. And especially I didn't know what was going on in the larger time frames, like the 10-minute time frame, where we see important areas. Now that we're seeing this action playing out right in front of us, we can consider this the target zone. Tapping into the area again. Maybe this is the second tap to go lower, because we're definitely in a more supply zone than demand zone. Price hasn't really been trading on that area, on this supply zone, for too long, right? There's nothing out there because it's making new highs on the 18,000 mark. So we might be tapping in to trade lower, or finally trading higher. Maybe we break these lows, push to the moon, trade lower to this area again, maybe here, trade back up. And now we're in a bullish market. That could be the case. We are in a bullish market. Overall, even though these lows have been making it seem like we are in a bearish place, this is my origin area that I thought price wanted to get back to. Traded around here again. This low being the one responsible for breaking structure, and that's where price tapped into and left. I drew this little zone earlier where I thought price wanted to come down from because of this. We pushed through that. Now we're tapping back in. So yeah, we ran that low that I mentioned. So this might be a really good place to trade down from. If we see price go back up and not break these highs or run these highs, we can maybe get a scalp down. But of course it's not letting us, because right now it's still running lows here. So yeah, I've decided I'm gonna go get some coffee, guys. It's only 11. Jesus, 11 already? What the heck? I only have 1 more hour to trade. That is nuts, how time flies when you're trading. 1 hour and a half already? Whoa, I didn't start at 9:30. I've been at this for an hour. It still seems like a lot. Very short time. Oh man, that would have been an awesome entry, but we didn't take it. We didn't see the signs. But we are aware of these areas. We are aware that this is very likely to happen. So as we're getting better at trading, can you imagine what our jobs are going to be like? Make money, make money, make money, make money, make money, make money. We're going to be making so much money, we're not going to know what to do with it. Look at that. Look at all that money. Look at that move. Just that move. That's it. You can retire for the day. You can retire and go have some fun. 11 a.m. You just took this move. Go home. Well, you're probably home already, but go outside the home. Leave the house. Get some ice cream, whatever you want. You can afford it. You didn't take any dumb trades. You made a little money here, 75 bucks, just to cover your expenses for trading, right? Price goes up, take a trade here, and you take 300 bucks, and you go home. Maybe probably more than 300 bucks, maybe like 350. Well, maybe you get in here, right? Let's be realistic. Let's say you get in here. Okay, 200 bucks. 275. You can go home. Or like get out of the house. In any case, I'll be right back, guys. I'm gonna go get some coffee. I'm gonna leave you guys with music and the chart. Don't go anywhere. And we're back. Whoop. The hell. One-handed doesn't work. Okay. When I saw this as I was walking in, I was like, whoa, juicy spot for a trade up. Tap into the area. Now we're going higher. So let's see if we get a second tap. Maybe here. Because it's a lower low. Or 50% of this imbalance around here. Oh, perfect. Aligning perfect to the stopping point there. Could be placed to trade lower. Aim for this low here. Subscribe twice. We can't really make a good entry here because we're in the middle of our range. This move trying to see where it would have been a good entry for this. I guess we would have gotten an indication here, or maybe here, when we ran these lows, traded higher, and then maybe this could have been a great candle to entry and scalp down. We're almost at our 50,000, guys. Can we do it? Like the thing, if you believe we can do it. And of course, landscapers are in my property or nearby. You might be able to hear the noise. So our morning just got a lot trickier. I would be inclined to take a trade up if we hit this area here with this fractal. Little bit of an imbalance here, actually. Very tiny. Right there. Not really. I mean, maybe not, could not be considered an imbalance. But this is definitely an imbalance. It's starting to look like a replay of this move up. But again, we're still getting rejection from this balance here, which is pretty big as far as imbalances go. All this area. This could be a scalp down, but I'm not willing to risk when we're in the middle of our range. I'd rather be in the bottom or the top, where we do get more fake outs, but when we do get them, we can learn to get on entries for swing trading movements if we get better at this. And then that could be real. It could be a career that we can make out of that. The ATR 9.6, 12 at 10 a.m. So yeah, pretty low ATR. Or the range is about, you know, probably the middle is about 7, 8. It's a good number to trade for us. Because our stop losses don't have to be, or can be too narrow, or can be narrow. We don't have to give it too much space, which is good for us to manage risk. I hope the music is okay. Speaking of which, I'm gonna make sure it's still copyright free music. Oh no, this might not be copyright music, free music. This is for sure. Jeez. Got my coffee? So we're definitely doing much better mindset wise. Man, those landscaping guys, I swear. I swear. It's like they're here every day. And they just started. So they're gonna be here a while. Yeah, price not really leaving the area there. So the next low to be ran is this one. And the last high still here. This is an important area. Just looking at this might be trading lower before trading higher. Because we did break this high, that makes, I believe, this our validated low. Maybe this, because this is the low that created this high, and this is the low that broke the high. So a lot of protection here. So let's see what happens when we tap back there again. We might get another pullback down if it doesn't go through it and tries to run this high. Yeah, I have not fixed my bit rate because I don't know how. I'm gonna take a look at a video to see if I can find out how to work the bit rate on the stream. And here's the disclaimer. Well, here are my rules. Here's the disclaimer. It's important that you read this over and over when you watch my stream, and to remember that I'm not a professional in any capacity. I'm just a rookie. You are following my journey here to become a profitable trader. You might have the same journey as me. You might be on the same boat. And this might help you or be entertaining enough to inspire you to start trading if that's what you really want to do. I used to think trading was like basically a scam. I believe that there were profitable traders, but I always thought they were just kind of savants. I don't know if that's the right word, but there are these people that are born with gifts of math and numbers, and you know what I mean, like prodigies or geniuses, whatever you want to call them, like people who just think differently and see the world differently and can have a lot of data in their brains, and then they can see patterns. So I thought trading was, those people who were profitable traders were probably those type of people. And that trading was not really something that a regular average person could be profitable doing. I also thought that it would require a lot of capital to get started. I also believe that institutional money would just wreck retail traders, which is probably true for some people, like in the grand scheme of things. But what I didn't realize is that discipline, skill, work, dedication would ultimately lead to someone becoming a profitable trader. And then once I made up my mind that that was the case, it's just like any other profession. Because think about it, like let's say you have a job, a steady job in a corporation, right? I'm gonna take a look at this imbalance later on. Maybe we can tap back in and trade higher. Let's say you got a job at corporate America or corporate India, whatever country you're from. You're in a corporation, big company, and you wake up every day, you do your job, and you collect a payment of, paycheck. And that's, I guess, for some people's way of thinking, that's a steady job, a responsible way of doing things. You get a steady paycheck, you wake up 9 to 5, Monday to Friday. You have the weekends off, you get 2 weeks off a week per year. You got the job, or 4 weeks, whatever. Nowadays they're giving more time off for more than 2 weeks. But in any case, you got steady job, steady income. You're a responsible person. There's an imbalance happening right now. This could be a good place to trade higher from, but we'll see what happens here. And a trader, in contrast, doesn't have any of that. Doesn't have a job, a boss, a schedule. So they're irresponsible. But the way I see it, they're both gamblers. The corporation man or woman is gambling that the corporation will take care of them, that the corporation will do right by them. Because as far as humans go, we are not machines. We don't operate the same way a machine does day after day. And we all have circumstances or get into times where we cannot perform as well as before. And the corporate person is taking a gamble that the corporation will be there when those times arise, that they won't, lay you off. So even the corporate person is taking a gamble. The trader is taking more of an immediate gamble and lots of gambles to make profit. But if the trader wakes up every day just like the corporate man and works and has rules, like in your job, you have rules. You gotta, show up at a certain time. You gotta do your job a certain way. You get time off for lunch. Then you get back at it. You cannot leave your post until you complete the job for the day. So what if the trader does the same thing? Shows up every day with rules, abides by those rules, then becomes profitable. Now they have, quote unquote, a job. But whose gamble? Who made the gamble that has more of an upside to it? What's the upside of the corporation? That you work for years and years and the corporation believes that you're an asset, promotes you, increases your wages. Eventually you become an executive in that corporation. You own stock in that corporation. And by the end of your career, you have a lot of benefits. That's the upside. But what's the upside for the retail trader? Anything you want. The upside for the trader is anything he or she wants. They can make a lot of money in a week and take 2 weeks off. They can take a big gamble, depends on how they manage their account, is basically what I'm trying to say. Anything account permits. So if you build up your account, just like the corporate person is working to build up their, you see that imbalance did create another high here, run of the high. It did have a little bit of manipulation here, leaving an imbalance again. But this imbalance definitely gave us a run of this high here, or this one. Break. See if the break happened. Yep, the break did happen. Now we might be trading lower. This might be a second tap. That would have been a great place to put a trade on. And again, not enough time. Price gets rejected abruptly. But we could not make a trade on the downside here because we did break the low, sorry, the high. But we also did run this high. We have not broken this high yet. So yes, there is indication that price wants to go down before up again, but we have to see this play out first. Let's see what happens here. Unless price just shoots from there and not coming back for a while. So the upside for the retail trader is anything the account permits. Now, a certain belief could be that the corporate person has a leg up against the retail trader because the job will always be there, pretty much. I mean, it's not, but there's more certainty that their job will be there and that the income will be there. And for the retail trader, that's not the case. The retail trader has to be profitable. And if they're not, then it's worse than not having a job because they're losing money. It's not like they're not making money, they're losing money. So even a unemployed person is better off than the retail trader. So the downside is greater for the retail trader when things are bad. But if the retail trader manages to be profitable, right, then the retail trader gets the upside. They have no schedule to abide for anyone else. They can make their own schedule. They need rules and they need discipline, but they can set that discipline and rules based on their own personality, cater to themselves. Whereas the corporation is not going to do that. You need 3 days off and Mike needs 2. Well, you both get the same. There's no preference. There's no, well, I mean, could be preference, but that's another story. That's not supposed to be the case. At least corporations are supposed to be fair to their employees. But like I said, the world doesn't work in black and white terms. Life is full of surprises. And I think the retail trader, it becomes advantageous. It becomes advantageous to be a retail trader when those situations arise where having a job might actually turn out sideways. Like, for example, a corporate person or employee has really bad circumstances going on in their life. Maybe someone in their family is sick, or they themselves are sick, or just some unexpected thing where they have to travel. The corporation will play along for a bit, be kind in a way, but ultimately their end goal is profits, just like the trader. But for them, it doesn't matter. One employee makes no difference. They're not gonna hold operations for one employee. And so that employee would probably be let go at some point. Whereas the retail trader has that advantage that they can do whatever they have to do and then get back to trading. The market's always there. There's never a lack of work. So who's taking the greater gamble here. I think they're both equally gamblers. Like they're both gamblers. The corporate man or the job man and the retail trader are on the same boat. Again, the main difference being that the corporate person doesn't lose money. However, I will say this. Say you're a corporate person. And by corporate, I mean, it could be any job. I mean, just a job. I've had a job. It's not like I'm a retail trader. I'm actually not a profitable trader yet, so I cannot say that this is my own experience. But I've had a job before. I've had multiple jobs. And even though the income comes in, right? When you have a job, you get paid for your time. So the income comes in. But because there's a sure expectation of income, we as people tend to make decisions based on that expectation. So we, for example, get a car loan, or we buy a house with a mortgage, or we take a vacation that we cannot afford immediately, but we know that over time our income will be good enough to offset that vacation that we took. And that is, to me, similar to the gamble that the retail trader takes, that they might not make money that day, or that they might lose money. You see what I'm saying? It's a different gamble, but it's a gamble nonetheless. Now, a corporate person that doesn't do that, right? Like they don't buy things they can afford. They pay everything cash. They live below their means. They don't get in debt. Then that person mitigates the risk. But so does the retail trader mitigate the risk by learning every day how to get better at trading. So again, it's different gambles, and different ways to manage the risk of those gambles. But ultimately, a profitable trader has more upside to look forward to than the corporate person. And you could argue that maybe even more downside, right? A profitable trader that proves to be profitable month to month, year by year, but then maybe has a stretch of losses that are really big. That could be a potential disaster. But they can always get back on their feet, even if they're very, very, in a very bad predicament. It probably will take some time, some adjustments, some sacrifices, but then they can get it back. If they are profitable traders, then by definition, they'll eventually start winning again. And the corporate person, if they lose their job, if they get laid off, yes, they can still get back on the horse and get another job at another corporation. But I think this is actually just my opinion. You could disagree with this. Let me know in the comments. But a retail trader, well, what was I gonna say? I'm sorry. I'm checking this thing out to see if we can trade high from here, and this might be a good opportunity to trade high from. I'm gonna check it out. Sorry guys, I'll be back to that conversation. Very interesting conversation I was having with the chat. All right, here we go. I placed the order. I have a good amount of room here. All right, that's $70 in that trade. I saw that my entry would have been below this lows and that my profit would have been somewhere around here, maybe less than this highs here. So I thought it was a safe bet, especially with these three candles never closing below basically this low here created. And I might even get another entry up. This candle did break these lows, but not this low. So we might be heading over there again. But I'm going to wait a little bit here. Well, that candle did break the low, run the low, run these lows. So see, moving my stop loss was actually a good idea. My initial profit was here. Price was trading here, so I put my stop loss here. That was a good move. I didn't want to get too greedy because it was a quick scalp up as price is coming down to the bottom of our range. But it hasn't finished, which is actually, this is a really good indication that we are trading higher again. So I might get another entry to the upside. So we're back at 50,000, guys. We made it. After one day of really bad losses at $350 drawdown, day 2 and today day 3, we managed to get back to break even. $11.44, so we only have 15 more minutes to trade. Part of our rules is to only trade from 9:30 to 12. Okay, yeah, we did run the lows. That was a good move in my opinion, but a bit of a lucky one that we didn't trade lower from here and we actually went up. But we did have some indications. This could have ended up being a trade up and we would not have been surprised that price did that. But of course, we were looking at the validated low being all the way down here. So there is still room for price to trade lower. Actually, let's see. No, yeah, this is not a validated low because price didn't break this high. It just ran it. So our validated low is still all the way down there. And as you can see, we are heading over there. So this ended up being a really good place to get in, scalp down, move up, longer move down, leave from the area, possibly towards this area. So we might not see another high before we break or run some of the lows and break some of the structures that are here. Especially this one being one that we're aiming for at the moment. Well, actually this one first. Because price could trade high over here again before leaving again. So it might give us yet another entry. Especially because price did trade higher than this. So we're not really considering this a move up, down, second entry, right? This is not the scalp down, leave from the area. It could be, but the reason I don't think so is because we didn't, because we made another high and we actually ran this high, whereas here we didn't run this high. So now that we run the high, then we trade lower to trade up again, maybe around here. Especially this imbalance here looks promising. And then down further, there's also an imbalance left here in this wick. So we are probably gonna go back there to test those areas. And this could be a good place to leave from because this is the low that broke Well, it would be actually this one. This would be the low that broke this structure. This one. But right now, we're still bearish on the very moment, at the moment, you know, on the lower time frame. So let's look at the 10-minute chart to see what's been going on while we get very nice sound from the landscaping guys. So on the 10-minute, we're headed to that supply area I had mentioned, but we're not there yet, and we really haven't done anything. This line still proves to be a very good support area that we drew from all this back testing. So it has proven to be an area where price taps into and then makes new movement, or makes movements that might have been unexpected, or breaks of structures. Only 12 minutes to trade, so we might be able to squeeze another trade if we see a setup playing out. Like this could be a good setup. Maybe this is a double tap before trading higher. I like this actually. I do like this for trading higher. So we'll check it out. And the tricky part about trading this specific way is that we're looking for reversals. So sometimes it seems like we're going against the trend, and we're hoping that we find the spot where price is reversing from, which is good risk management for taking trades that have a short stop loss that could bring us a lot of profit, but it also means that we're going to be wrong some of the times. Okay, this is the candlestick pattern that we'd like to see for a reversal. Took a trade, 5 points. Price going in our way, but might have been a little premature entry. This candle will have to turn red if it's not going our way. Okay, we got that trade again. Now we are $54 in profit on the overall account. $60 move. 3 points. I went for 3 points only on this trade because I was hoping to get in on a really good entry and not risk too much. Maybe moving my profit a little higher, but I didn't because I did not get a really good entry here. It was just enough, actually, just enough. And I was not in a drawdown. Even though it was a very short stop loss, it did not hit my drawdown. And then this would be probably the best entry to take going up right here. But price is just ranging here. So we might get another tap in this area. This is an imbalance created, manipulation. See if we can tap into it, trade higher, unless we run it straight. This could end up being a bigger move. We did not run the high here, so we don't have indication that it's trading higher, except for the wick and the manipulation and imbalance created here. So now this would be a good entry if we want to go up. But we'll see. Yeah, we ran it. You see that? That's why I didn't take it. I was waiting to see what would happen there. If I had seen a strong reaction up, that would give us indication that we're trading higher. So this might just be this here now, and then another chance to move up. But not at the moment. We are trading lower. We run this high, sorry, this low. We ran this low too. We had mentioned that this low was very important earlier. You can check out the video in the beginning, not the beginning, but somewhere around 10 a.m., 10:30, that this area was important. Actually at 10:35. This one well, later than that actually, because we saw this already. So probably around maybe 10:40. I mentioned this area being a very strong support area. Maybe I didn't use those words, but that's what I saw. Yeah, I think it was that and not this, because this is the last low that created this high, which ran all these highs and broke the structure. So we are going to take a trade from here because we are considering that area to be really good. And especially because there are more lows to be ran to the downside. So we're going to monitor it. It's not really turning out our way, the way we wanted it. I was hoping this candle would be bigger on the upside, engulfing this one. But no, we're still getting bullish indications here. But this is definitely a bottom that might, yeah, wick out. And what sucks about this trade that I just made is that even though I am not too upset about it, about the placement, there is a big gap here. There's about 7-8 points here. So if we do get our stop loss hit, we're gonna lose all our profits and then some. So we go to the break even here if price goes halfway to our profit, because we can then take another entry if price is going to trade lower. Okay. Okay, we got it. And we got the full 7 points on that trade. Well, not really. 6 points. 6 points. 11:56. Perfect timing to stop. We are $168 in profit. But for the day, we are $325. No bad trades today. 4 trades, all winners. If you look at my stream on day 2, I took 2 trades and I was talking about how improbable it would be for me to get a 3rd trade as a winning trade. And today I actually made 4 winning trades in a row. So we got to take into account that 2 of those trades, I moved my stop loss towards my target, and that's why you know, it's not that much money for 4 trades, but a very good day nonetheless. But the reason why today I kept trading, even though I had 2 in a row and then 3 in a row, and actually went for 4 in a row, is because I am seeing things in today's market that gave me signs of entry. And I took those entries and they played out in my favor, and very well executed price action. I mean, I did go into drawdown for a bit, but again, I had a really good stop loss where price would have had to run these lows here. I noticed that it did run these lows, but I also mentioned this was a very strong support area. I saw the wicks, 2 wicks forming here, especially after taking the trade here. I was more inclined to go up from here than from here for sure, because we then ran this low. Turned out to be a great trade. 4 trades in a row. I did record this one, but let me just record the other 3 trades. Trade number 2, going up, 18,037.75, 18,041.25, 70 profit. This was at 11:42 a.m. Trade number 3, again going up, 60 profit, 18,030.25, 18,033.25. This was at 11:50. And then the last trade at 11:56, 18,021.25, 18,027.25, $130 in profit. Really good win on that one. 325 profit. That is a really good day. A really good day. I think what made it was that I got my coffee, and that's what made the difference. I'm sorry I stopped talking about the whole corporate man versus trading man analogy and risk and gambler conversation I was having, and I never went back to my points, but you get the gist of it. Okay, maybe being a trader is not as much gambling compared to other decisions that we make in our lives. That was just me brainstorming those ideas, that just because you're a trader doesn't mean you're a gambler. Corporate people are gambling them as well. Everyone gambles all the time, because every decision that we make has consequences, and those consequences sometimes are not as apparent as the consequences that someone that takes a lot of risk are evident, you know, are as apparent. So the main kind of topic there, or the point I was trying to make, is that you got to consider, or I consider, what type of risk taker I am in life, because everyone's a risk taker. We're all taking risk all the time, every decision we make, you know, not risk that something might go bad, but life is unpredictable. And that's why everything is a risk, because we never are sure 100% of what might happen. So price went up there again. My trade again being kind of a ceiling. These are risky trades if you consider them that way. As you can see, I went up, price didn't trade higher. I went up, price didn't trade higher. I went up, price traded a little bit higher, but I guess the timing was well executed, and the spot from where the trade came was really a really good spot. So even though it seems like I might have just been getting lucky, I actually consider a really good day of trading, because my entry spots were pretty good. And this trade down, the first trade where we went down, it was a this, I think this is the one where we moved our stop loss, one of the ones that we moved our stop loss. It looks like we traded downwards on this one. In any case, that was a good day for me. On my way. This is definitely the place where now we are looking to reverse from. If that's going to happen, I'm not going to be around because I'm done trading. But notice that this low that I mentioned here, it got broken by this candle. And then what? Huge imbalance left from here to here. So we can expect price to trade higher now if it's going to do that, and then come back to this area. And this could be a very interesting point where price could go up or down. Now, before I leave for the day, what I'm going to do is I'm going to draw a few lines to make a projection of what could happen in the next in the next hours, hour, 2 hours, whatever. And we'll see if my predictions play out tomorrow. I would say, will we run these lows? I don't think we're gonna actually break these lows. I think we're gonna trade higher before trading lower. So we're gonna go here, and then maybe now we run this high finally, breaking structure from the left over there. I probably should be doing this on a 10-minute chart instead of the 1-minute chart here, but this is just for fun. So that's what I would think very likely to happen. It's hard to get these lines to, oh man, let me get this off. Something like that could pretty well play out like that. So yeah, I'm happy with that kind of prediction, I guess. I mean, that's considering if we leave from here up, but we could actually leave from here, maybe break the low there finally before trading higher. And then trade lower. So those are the kind of the two scenarios that could play out. Of course, once we see it, we're gonna be like, oh, we were right or we were wrong, but whatever. It's just for fun. Yep. That's it for today, guys. Thanks for watching. I hope you were entertained. Catch you on the next one. Peace.